Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week we're discussing the importance of fixing goals and then setting a plan and doing the appropriate asset allocation, why that's quite important. We have a viewer joining us on the phone line with a question. I think Karan is on the line. Karan, hi. Welcome to the show. Tell us, how can we help you?
I'm planning to pursue my master's in US after a year, and the tuition fee is around 40 lakhs. Currently, I'm able to save pretty much 20,000 rupees a month. How can I plan my finances for my master's?
Okay. Karan, I don't know if there's an immediate answer in terms of investments because your goal is just 1 year away. So I'm not sure. Sandeep, what do you say? Well, what's the recourse? It has to be an education loan,
yeah,
right?
It has to be an education loan.
Okay. Gurmeet, any advice to Karan? How should he go about it? And I guess in 1 year, I mean, I don't know if there's any way of creating any kind of a corpus.
No, so I think the welcome part is that he's willing to save whatever little amount on a month, but 20,000 a month is too less to meet the expenses of US masters. So while he can start, whatever little he can save will only, everything adds up. Each drop makes an ocean. But as Sandeep said, think of an education loan from a reputed bank. Education loans also qualifies under Section 80E in the old taxation regime, where you are allowed to get interest reduction also under Section 80E. And the good part about education loan is that the EMI only starts once the study gets over, right? So that is one. Second, it also doesn't put burden on your family, per se. I'm sure you would have had some savings too because you're going for US Masters. So I'm sure there will be some savings to draw upon. But eventually it makes you, you can call it Atmanirbhar in terms of you taking care of the responsibility, of your career. And also, I think gets focused back. They say the best way to love your job is to take a loan.
Then you don't have much options of moving around too much, right? Point taken. So, gentlemen, let's boil this down to final advice. So, once again, a recap for all our viewers on why goal setting is important, no matter how fluid or flexible you want your life to be. Gurmeet?
As I said, don't always go for the best returns, go for optimal returns. Once you do asset allocation, you embrace that, investing like life is uncertain. Also, different assets do well across different periods of time, right? So in a crisis, like let's say Lehman crisis in 2008, equities corrected more than 60%. In COVID period, equities corrected more than 40%. In fact, equities correct 10% almost every year, right? In those periods, safer havens like gold, bonds tend to do better. So it's also important to have negative correlation. Even within equity, you have negative correlation. For example, in US, you had all the large caps doing well. India, actually, it was the other way, the small mid caps were doing well. So it's important to have low negative correlation. It's important to have diversification. And for that, once you bucket your investments, you arrive at an asset allocation, and that determines 90% of returns.
Okay. All right, Sandeep, your final advice and points to remember on this.
So basically, identification of the goal is a very first step that you have to start with. And then you have to stick to your asset allocation. You have to do review with your advisor. And, the best advice is that people underestimate the help that an advisor can give to an individual. Because everything you cannot, think through on your own. So have a good advisor by your side and stick to your asset allocation.
Okay, fair enough. Gentlemen, thank you very much. I think it's important to keep these basic hygiene rules in mind as we go about looking at our portfolios and the wealth creation journey. Thanks very much, Gurmeet, for also joining in. And with that, it's a wrap on this edition of Let's Talk Money. Thanks for joining in. Keep sending us your feedback, comments, and queries. We'll see you again next week.
Let's talk money.